We have a lot of corporate conversation that's lined up for you on the show today. And the company that's joining us today is Sky Gold. Now, over the last 6 months, the stock's been fairly volatile between 250 to around 400 itself. If you look at the reported numbers, the P&L, strong revenue growth is what the company has reported, with operating margins improving as well. But the operating cash flow, however, that remained negative. Mangesh Chauhan, who's the MD of Sky Gold and Diamonds, joins us now to discuss the quarter gone by. Good morning, Mangesh. And that really is the first question. If you look at the first half of this year, your revenues have grown 75%, but at the same time, your receivables have grown 40%, and your cash flow remains to be negative from operations for the last 5 years or so. So just wanted to understand the receivable cycle for the company, and why is it that despite the sharp compounding in revenue, it's not converting into operating cash flow?
Again, you can see our company is into hyper growth. We are growing by 40-50% growth. So that's why we are cash flow negative till 2027 March. And after 27 March, we will be 100% cash flow positive company. So about the receivable, I will tell in the days wise, we have reduced the receivables. We were at 73 days cycle in March. Now we are at 65 days cycle. But in absolute number, it has increased because our volumes has gone up. We have grown volume by 20% and revenue by 30%. So our sales have gone up by 30%. That's why in numbers it have increased. But again, we have opened our international Dubai office, where receivables are very low, and we have again accelerated our advanced gold business, in which golds come with the order to us, so we don't have to fund the receivables and all. So that will help us to reduce our cycle, and in future 6 to 8 quarters, you can see our cycles will come down to 50 days. By 10 days, it will reduce, and 100% of our receivable also will reduce as coming quarters.
All right. Hi, Mangesh. Good to see you. The stock has done very, very well. Revenue growth has been very, very good. So you're saying by FY27, you will turn operating cash flow positive. Is that correct?
Yeah, perfect.
Okay, all right. But tell us, explain this to us. The cash from financing activity, that's gone up big time, from 10 crores to around 400 crores. Explain to us, why would you do something like that? Even you have a fixed deposit, I believe, of around 130 crores. Why not you just use that money instead of keeping it in a fixed deposit? Use it for your own working capital, right?
So again, we have put this fixed deposit into bank collaterals, and we get a GML gold metal loan at very cheaper rates. So when we keep a FD at 7% or 6.5%, and we are getting a gold metal loan at 3%, so we gain from that income also. And Government of India, RBI, has given a provision for the renowned manufacturer to use this gold metal loan opportunities for the manufacturer only. So we are slowly going from CC limits to gold metal loan. Already we have used 8 to 10% of the limits. And in coming 3 to 4 quarters, we'll be at 70-80% of gold metal loan. That is help us to reduce our interest cost, which is below the EBITDA and all. So that's why we have kept so we get 3 times, 4 times more leverage of gold metal loan. When we keep 100 crore FD, we get 400 crore gold metal loan.
Got that. Just one more question around the balance sheet itself. While your receivables have increased and, because you're saying it's on account of hyper growth that you're doing, you have increased your provision for doubtful debts as well. This was about 30 lakhs in the previous year, and that's increased to about 1.5 crores. So there's worry, right? Because of your growth and not receiving money immediately, there could be a case for you not getting that money eventually. And that's why you're increasing your provision.
So it's not like that. As per the auditing policy, we have to keep the provisions for that, but all the accounts are active, and 1.5 crore is a very small amount, and it's also going to come in next month. So it's as per the accounting policy, we have to keep the provision, but all the debts are very active and positive. So we, as a B2B manufacturer, our debt is into A plus and A rated customers. All the big corporates of India, like from 50 to 40 topmost client we have, and all our receivables are under large corporates. All the large corporates all have the rating of A plus and all. So that's why as already we told, we are into hyper growth, and we are going into volume growth also, revenue growth also.
Okay, all right. Since you led me to the next question, let me ask you. A lot of big clients you have, right? Name the top 3 to 5 clients.
So again, we have Kalyan Jewelers, Joy Alucas, Senco Gold, GRT Jewelry, Jos Alucas, Lalita Jewelry. Many clients we have. Okay. And again, Carrot Lane, Aditya Birla all onboarded before 2 quarters or so. Carrot Lane is also giving us advance gold to do the business. We are going good with Carrot Lane, which is subsidiary of Tanesh. Aditya Birla itself started the business with us.
So, with all these big clients, what is their average payment cycle and how many of them are currently more than the 180-day bucket for you?
So on average, they are at 40-45 days, and average our receivable cycle is 30-31 days, and which is going to be improved to 20 days because the new business coming is totally cash and carry business with exports and all, and advanced gold business is picking up from 2% to 6%, and we are picking up to 12%. So you will see gradually in 3-4 quarters will come down, and receivable as maximum 40-45, average is 30 days. So nobody is. Okay. Is about 50 days.
You know, I was looking at your balance sheet between March and September, the acquisition that you made, because of which your goodwill has increased from what, 42 crores to around 250 crores. Why do you pay so much over and above, you know, the actual value of assets? And is there a case that in the very near future this goodwill would be impaired, thus impacting your bottom line?
So we have acquired a company which makes Italian type products of bangles, which is very exclusive in India. And this company works on totally advanced gold business. So we are expecting we don't have to invest any amount in it. It is very high ROC accretive company. And this subsidiary will work on totally advanced gold business. So we are expecting 50 kg per month in this year, and next year 100 kg per month. And third year is 150 to 200 kg per month. So we are expecting a good PAT of 40 crore in next year from this company and 80 crore in third year. So it is a ROC accretive company. That's why we have acquired this company, and no impact will come on this.
All right, Mangesh, a simple question now. You know, you're heading the company. Ideally, a promoter would like to maintain a particular stake in a company. And if I look at the promoter holding, it's still majority, more than 50%. However, since, you know, in the last 24 months, it's come down from around 70%, 73.5% as of September 2023 to around 51.7%. Is the promoter done with the dilution, you know, with a little bit of sale in the market as well? Or is there more to go on this front? Because ideally, a promoter would like to have a bigger chunk of a business that, as you're saying, is going to improve. Point number one. Point number two is, I think you were talking about, you know, appointing a bigger auditor. It's one of the, you know, the big four. Is that on the cards? Because currently the auditor is quite small. Please go ahead.
Again, you can see in 2023, we came in main board and we opened a facility of 1 ton per month. So we were at 30% utilization. That's where we done a fundraise of 2 times in that year. First was from HNIs and second from mutual fund. And we had got all the clients on board, and we were at a 1 ton facility. We got major orders from the large clients of our in India. So that's why we diluted ourselves to accelerate the growth and revenue and again profits and all. And I think we don't need to dilute from here to 3-4 years because we will be cash flow positive in 2027 March. Okay. So last year that was the need of the company. We came into a new facility. Last facility we have many orders to cope up with them.
So and promoter holding will not fall further from here. 51% is what promoters will maintain.
Already correct? We have done an OFS in June month.
Yes, so you'll maintain it at 51%.
Maintain it 50.
Correct. And the auditor, the appointment of the auditor, you
already appointed Big Six. Big Six already appointed. We need to follow the compliance to announce it, but we are going for Big Six, and next year will be audited from Big Six.
All right. You know, since the promoters, both you and the other Mr. Chauhan, together got about 50 crore rupees for acquiring sparkling chains and, you know, Star Mangal Sutra in the main company, would you not want to plow that back into the company and increase your stake?
Again, as we said that June only we done the OFS that compliance does not allow us for 6 months to deploy any cash from the director side. There should be a 6 months cap for between that. So as and when required an opportunity comes, we director are very happy, will be happy to deploy that. But now there is a 6 month compliance period. We cannot deploy.
And a final question before we let you go. Now, because you have international operations coming in, a new facility that you've opened, etc., what rate would your revenues compound by over the next couple of years? And what would your margins be?
Again, we are targeting to be at 4.5 ton per month in 2031-32. We are going to open India's largest standalone facility of 540,000 square feet. which will be started in 2028. And we are at 0.6 ton per month. And when we enter that facility, we will be at 1.2 ton per month, and we are targeting to be 4.5 ton per month, which will be India's largest standalone facility. And when you come to India's jewelry, India makes jewelry something 600 ton. So we are at now 1.5% of India's stake, and we want to be at something 4-5%. So vision is to be India's largest manufacturer by 2031-32, and we are taking step ahead.
Okay. All right, Mangesh, appreciate you joining in. Thanks for clarifying on a whole host of issues. Some of those questions as well, you've answered, but we'll have to track you to some of those numbers. Wish you well, and we look forward to chatting up with you at the end of this quarter as well. The stock has been one of the big outperformers, but various questions on the balance sheet as well as on the operating cash flow, which the management says that they will be addressing in the time to come, and promoter stake will not fall as well.